Oh, there we go. I think we got both of them going. Hey guys, happy Friday. We've got a couple things to talk about here. I think glasses are reflecting the light today really bad. A couple things to talk about today. We have our Phoenix real estate market update. I've gotten a lot of questions lately about what does it cost to buy a house actually. And so I wanted to go over kind of probably one of our more common price points, right? $500,000, and it's easy math, which makes that even better. But say we're going to go shopping for a $500,000 house. There's a few things that we need to talk about, and this is for financing. So we're going to talk down payments and a little bit of closing costs. So $500,000. Typically, you want to start caveat, right? You want to talk to a lender first to make sure that all is good payment wise and budget wise, and they'll give you your actual closing cost estimates. But this is just a rough run through. So $500,000. Once we can make an offer and get an offer accepted, we need to deposit an earnest deposit right away. And what that means, it's a check or a wire transfer straight to title for 1% of the purchase price. So $500,000, that means it's a $5,000 earnest deposit. Okay, that's like day one. Then in your first 10 days, you're going to have your inspection period. A typical home inspector costs somewhere between $350 and $500, depending on the size of the house. It can go higher, can go a little bit less, and it also depends on what inspections you get. So we'll say for easy math, right, $500. Then an appraisal would be the next piece. Appraisals are going to be for the lender to justify the value. Those also can vary a little bit. Most of them are somewhere between $500 and $700. And then the last part is the remaining down payment. So whatever you've decided to come in with, at $500,000, we can do an FHA loan for 3.5% down, which is a $17,500 down payment. So that's $17,500 minus your initial earnest money, right? So an additional $12,500. So we're really talking about at an FHA 3.5% down at $500,000, we need about $18,500, 19 grand in cash to be able to buy that house with your earnest, down payment, inspections, appraisals, all of that. So all of that taken care of. We can then scale it up if we're going to do a conventional loan. We can do a 5% down option. Same first three apply, $5,000 earnest, $500 inspection, $500 to $700 appraisal, and your 5% is $25,000. Okay, so 25 minus 5, it's an additional $20,000 at closing. When we're talking closing costs, when you're getting a loan, those closing costs are going to vary depending on the rate, the deal that you get for a rate buy down, the lender that you use, if there's, depending on your credit, if you have to have mortgage insurance, all of that stuff kind of plays into that. It's going to be somewhere between like $6,000 to $10,000 in closing costs. And then if you want to do a full-blown rate buy down, which a lot of listings are offering right now, that costs about $10,000, and you can get your rate down maybe about a point. So there are a whole bunch of moving costs. The lowest that we would see right now is probably, that $18,000, $19,000 upfront to be able to buy that house. The cool thing about FHA is we talked about that a week or two ago, is that they dropped that PMI requirement by a lot. So it ends up a couple $100 off of your payment amount. And let me pull those rates up today, because the rates, which gets us into our next question, actually. The rates are looking really good today for FHA. They are at 5.7. So we have dropped below 6. FHA is 5.7%. A 30-year conventional fixed rate is almost 6.4. If we're doing a jumbo, it's under 6. It's 5.95. And VA is at 5.75. So there's some pretty good rates this week. They've been dropping, I think last week, about a week ago, not quite Friday maybe, but Thursday last week, we were over 7 on a conventional rate. Now we're down below 6.4. These are moving in the right direction here. So we'll see how long a little bit of stability lies at this lower end. I'm hopeful that it'll be there a little while. One of the other questions that we've gotten lately is, how does the banking crisis affect these rates? So if you guys have been paying attention this week, there were some big reports that were coming out, and the Fed was supposed to announce another rate hike. I'm not quite as well informed as I probably should be, right? But my understanding is they did raise the rate, not a lot, and it probably won't be happening If it happens one more time, it might do one more time, but they're about tapped out. So the reaction in the marketplace with these banks kind of going under with these cash runs is kind of it's gonna be leveling that out. So we probably have topped out on what we're gonna see rates at. And hopefully for the next little bit, they'll be hovering about where they are right now. So we're looking for a little bit of consistency here, maybe even watching those go down. And so we'll have to see what the rest of the financial news comes in as, and how the reaction continues with, are there going to be more banks that are going under, which, let's be real, probably. There are probably going to be a couple more banks that go under while they try to figure out how to handle all of this. But as all of that happens, it's creating instability. And so they're going to have to drop those rates. They can't do both and further launch more banks into crisis mode. So that's going to be good news for our markets, for those that want to play. So our market index today it's pretty consistent. Our buyers have gotten a little wonky with those higher rates and the rates bouncing like this and some of the banking news. So it's held pretty consistently. We're 17% below normal in our demand. But remember, we have way higher demand than we do supply, so it's still pushing us into that weak seller's market. We have one balanced market today, I think it's two buyers markets, maybe three. Queen Creek, Buckeye, and Maricopa, I believe, are our buyers markets. And the reason for that is there's a lot more supply with the new construction that are there. Queen Creek is barely a buyer's market right now. Next week, it probably won't be in a buyer's market anymore. It'll be balanced, and we'll be watching that. In fact, I could probably just pull this up and be able to tell you here what we're talking about. Yeah, Queen Creek, Maricopa, Buckeye are our buyer's markets. Goodyear is in balance. Surprise just kicked over into a very, very weak seller's market. They're 1% above normal as far as like balance. And then our top hitter is Chandler, which is 112% over normal. So Chandler, Fountain Hills, Glendale, and Phoenix, and then Gilbert is our fifth. So the market is heating up, and it really depends on where you are in the city and how close you are to new construction. So new construction, the faster they can launch those homes, that's better for builders right now because they know what the market is today, and they can capitalize on what's been going on. But the more homes that they launch, the worse it is for the surrounding areas. So the more supply that they push out, if the demand isn't changing a whole lot, the more supply they push out, prices are going to go down. That market index will be pushed back down. So we'll have to pay pretty close attention. Last I looked, they were not pulling the permit numbers that they had last year for this year. And so it doesn't look like they're going to be building quite as many homes, which will be good for our supply levels. So we'll just kind of have to sit back and watch a little bit. Oh, excuse me. What questions do you have? If there's anything else that we need to talk about today, jump on. I've got a couple more minutes here. And then otherwise, send me an email, send me a text, and we can talk about it next week. So every Friday at 11 a.m. Arizona time, we jump on here on YouTube and our Facebook page, your Adore real estate team. And then fun fact, we're actually doing a wealth building seminar next Thursday night. So we've got a couple weeks. April 6th at 6 p.m. So 2 weeks from now, we're doing a wealth building seminar, 6 o'clock at our office in Tempe. So if you guys want to come, again, call, text, email, and I can certainly send over that Eventbrite link. We've got a few more open seats, and we want to make sure that we've got enough materials and enough books for you guys when you show up. So let me know if you're going to be able to make that. We're going to talk a little bit about our investing journey and how you guys would be able to duplicate that. We're going to have Jackie Payne with Guild Mortgage there, who can talk about investor financing. We've gotten some deals done creatively this year with seller carries or seller financing for lower rates than we've seen on market, with rates dropping a little bit, though. It'll be interesting to see if we can figure out where those investor rates are and where they're at. So if those continue to improve as well, that'd be great. I know the back end requirements on loans, they're getting a little bit tighter as the economy grows a little bit more unstable. So some of those debt to income ratios are changing. Some of those credit limits, things like that might be in flux. So it's really important to talk to a lender before you start making a whole bunch of real big plans. So if you guys Don't have anything else. We'll see you next week. Thanks.